Hello, this is Japanese Economic Review Channel. Welcome back. Today, we are jumping right into one of the most interesting indicators for the Japanese economy, the latest Economy Watcher survey for January 2026. This isn't some high-level report filled with jargon. This is a real, boots-on-the-ground view of what's actually happening out there. So let's get right into it. So here's what we've got on tap. First, we'll find out who these Economy Watchers actually are. Then we'll crack the code on the key number in this survey, the diffusion index. After that, we'll get straight to the results, what's happening now and what's coming next. And finally, we'll connect all the dots to see the bigger picture. All right, let's kick things off. Who in the world are these Economy Watchers? You know, getting this part is absolutely crucial because it's what makes this whole survey so special. Okay, so this whole thing is run by Japan's Cabinet Office, and they do it every single month. The mission? It's simple, really. They want a super quick, super accurate picture of what's going on in local economies right now. Not last quarter. It's all about speed and getting that real, raw sentiment from the street level. And this right here is the secret sauce. This survey doesn't go to some high-flying CEO in a Tokyo skyscraper. No way. It goes to over 2,000 people across Japan, but they have very specific jobs. Jobs that are super sensitive to economic ups and downs. We're talking about retailers, restaurant staff, factory workers, even folks at staffing agencies. They're the ones who feel the economy shift, day in and day out. They are literally the watchers. Okay, so you've got all these different opinions floating around. How do you possibly boil all of that down into one single number that tells you something useful? Well, that's where the diffusion index, or DI, comes in. This number is the beating heart of the whole survey. The way it works is actually pretty simple. They ask each watcher, hey, compared to 3 months ago, is the economy better, worse, or kind of the same? It's a 5-point scale. If they say better, that's worth 1 point. Unchanged is half a point, and worse is a big fat 0. Then, they just take the weighted average of all those scores. That's it. That's your DEI. Now, how do you read this number? It's incredibly easy. The magic number you need to remember is 50. Just think of it like a tipping point. Anything above 50 means more people are optimistic. They feel things are improving. Anything below 50 means pessimism is in the air, and things are getting worse. And if it's dead on 50, well, that's just neutral territory. All right, now that we've got the basics down, let's get to the good stuff. What are the actual numbers for January? What's the verdict from the front lines? And here it is, the big number for how things are right now is 47.6. So right off the bat, you know exactly what that means. We're under that crucial 50-point line. The mood out there is a little bit pessimistic. And this isn't just a random blip either. This is actually the 3rd month in a row that this number has gone down. It's not a huge drop, but that trend tells us something important. There's a definite cooling off happening at the moment. And if we slice it up and look at the different sectors, you can see this feeling is pretty widespread. Household-related jobs, 47.1. Employment trends, 47.2. Both are clearly feeling the pinch. Now, the corporate side is doing a little better at 49.5, but even that is still just barely in pessimistic territory. So what's causing all this? Well, this is where the survey gets really cool, because we get actual quotes from the watchers themselves. Listen to this from a theme park operator. They said, a cold wave and a bunch of snow over the holidays meant way fewer visitors than last year. See? A real-world reason that perfectly explains the data. Okay, let's take a step back and look at the big picture. This chart shows us the trend over the last 20 years or so. You can see those massive drops during the 2008 financial crisis and, of course, the pandemic. Now, what's happening on the far right is nowhere near that dramatic, thank goodness, but it's still really important because it shows this recent dip has pulled us back below that 50 line after a pretty good run of recovery. But hey, that's just how things are now. What about the future? The survey also asks everyone to look into their crystal ball and predict the next 2 to 3 months. So, are things going to stay gloomy? Well, hold on a second. Look at this. The number for the future outlook is 51.1. It has just, and I mean by the skin of its teeth, crossed over into optimistic territory. Wow!
Now, that might not sound like a huge jump, but moving from below 50 to above 50 is a really big deal. It signals a major shift in mood. It's not like everyone's suddenly euphoric, but it tells us there's a bit of cautious optimism bubbling up for what's to come.
And if we look at where this optimism is coming from, it's pretty clear. It's being driven by the corporate sector. They're at a pretty solid 51.5. Households, they're sitting right on the fence at 49.9, so basically neutral. And the employment outlook is still dragging its feet a little at 48.3. And once again, we get a quote that tells us exactly why. Someone at a financial institution mentioned a huge new car factory that's about to open up. This isn't just wishful thinking. It's a real project that's going to create jobs and spin off business. And that's exactly the kind of thing that fuels corporate optimism. If we look at the history here, we see a pattern. For the last year or so, the future outlook has just been dancing around that 50 mark. Up a bit, down a bit. It really paints a picture of an economy that's trying hard to get going, but can't quite find that solid momentum. So yeah, this little bump into positive territory is great news, but it's part of a bigger story of, well, uncertainty. Okay, so let's put it all together. The present feels a bit rough, but the future looks a little brighter. So what does this all mean for Japan's economy? Really, it's a tale of two outlooks, isn't it? Right now, things feel a bit down, partly because of temporary stuff, like bad weather hitting sales. But when you look just a little bit down the road, you see this little spark of hope, especially coming from the business world, that things are on the verge of getting better. And you know what? The government's own summary basically says the exact same thing. The Cabinet Office says, yeah, the economy is picking up, even though things like the weather are causing some bumps. They think the recovery will continue. But, and this is a big but, they also point out that everyone is still worried about rising prices. So there you have it, the Economy Watchers survey for January 2026. It's a complicated picture for sure, but a really fascinating one of an economy that feels like it's right at a crossroads. Thank you so much for watching the Japanese Economic Review. We look forward to having you with us again.